Shares of Southwest are surging, although they're well off their session highs, up about 6% right now, after the company hiked its summer revenue forecast and authorized a $2.5 billion share buyback. Let's bring in Phil Lebeau now. He's in Dallas at the airline's Investor Day with more on these moves. Hi, Phil.
Kelly, we're in the Q&A portion of Southwest's Investor Day, where analysts are asking CEO Bob Jordan and the leadership team about some of the details they gave today about how the company plans to turn around its performance. We're not going to show you all of what the company said today in terms of what it plans to do over the next several years, but a couple of key areas. New growth initiatives in terms of enhancing revenue. How do they plan to do that? A good example is international airline partnerships. Southwest has never really been able to tap into the growing demand for international travel. They believe partnering with certain airlines will allow them to do that. They're also targeting $500 million annually in cost savings. Some of that will come through better utilization of the fleet. The fleet is a 737 MAX fleet they're transitioning to, but they're way behind in terms of the number of MAXes that they're contractually obligated to receive from Boeing. As a result, their CapEx in terms of fleet purchases is going to be about $500 million less over the next couple of years, and they're going to moderate their fleet plans, not cutting the number of airplanes they plan to receive over the next 7-8 years. They're just going to be moderating it a bit. And it really comes down to two things I want to show you here, Kelly. Cost per seat mile. This is Southwest versus 2019. Look how much higher it is compared to the network airlines. On the flip side, look at revenue per available seat mile versus 2019. Southwest has only grown 7%. The network airlines up 21%. Those two statistics explain the following chart. This is Southwest under Bob Jordan going back to February of 2022, and we're only comparing Southwest with the three other major airlines here, especially when you compare Southwest to Delta and United. They're nowhere close. So the bottom line for Bob Jordan, they've got to turn around their performance as quickly as possible, especially with the Elliott Management Group saying that there needs to be all new leadership here at Southwest Airlines and is threatening to call for a special shareholder meeting. We're going to talk about this with Bob Jordan first on CNBC today at 4:40 on Closing Bell Overtime. You don't want to miss what he has to say. We'll talk about the initiatives that they've outlined today and also talk about why he believes he's the person who should run Southwest and turn around this airline. He's not planning on going anywhere, despite Elliott saying he should be fired.
And, Phil, I'm just scanning through the news wires to see if there's anything that might have pushed those shares from being up about 10% earlier on to about 6% now.
There's nothing specific, Kelly. I think there's an overall question of whether or not they can hit the targets that they've put out there. Good example. They believe that they can increase their earnings by $4 billion by 2027, between now and 2027. We had Sheila Kahula from Jefferies on earlier today, and she said, I'm not sure they can get the $4 billion. Some of these targets might be a little bit too optimistic. We'll talk with Bob Jordan about that this afternoon.
Indeed. For now, Phil, thank you. Phil Lebeau reporting from that meeting.